What's up, everybody? This is the Crypto Baron here, walking you through episode 3 of the Crypto Times. Today, the topics I'll be covering are a recap of what a fucking week. The Bitcoin ETF Take 2, the browser ICO, the basic attention token, and how it impacts the cryptocurrency market. Here's today's top cryptos from CoinMarket.com. And boy, that's a lot of red. The capital flight from Bitcoin to Ethereum continues, and why wouldn't it? Bitcoin is literally stuck competing with itself, while innovative alternatives continue to establish themselves. Meanwhile, the Ethereum team is looking more like the best in the business every day. It's more scalable, it's starting to monopolize the ICO industry, it's got some big firm support from Microsoft, Intel, JP Morgan, BNY Mellon, Santander, and the rest of the Ethereum Enterprise Alliance. And outside of its own dev team, it has fintech and other industry firms like Consensus working overtime developing different end-user applications. So how does this all affect the future of Ethereum's price? While many of the end-user smart contract applications of the Ethereum blockchain will be private, the intention is to eventually link them all to the public Ethereum blockchain. So we're talking financial institutions, exchanges, supply chains, inventory systems, production processes, titling, ownership, almost any method of removing established third-party involvement that you can imagine is going to be placed on this network. And what is that worth? It's a hell of a lot more than $4.5 billion, I can tell you that much. So I'm going to touch on Ethereum a little more in a minute, but I also want to highlight ZCash as an attractive entry point and talk about a turbulent week in PIVX. Now, at its current valuation, PIVX has grown by 500% in 1 week and 150% since our first show last Sunday. And that being said, it had burst through $1 before hitting some giant sell walls on Bittrex on Thursday and Friday and getting pushed down to 50 cents per PIVX. So what happened? Well, a spike in volume based on PIVX's recent emergence within the altcoin community pushed past resistance and really exploded a small market cap blockchain. Then profit-taking met market manipulation and showed us how volatile a microcap that's listed on only one major exchange can be. So this raises some interesting questions. Who did it? Now, if you're on the Bitcoin Talk forums, go read through the announcement thread over the past few days. There's been a remarkable and very obviously coordinated crypto cock blocking attacking the FUD PIVX. FUD is spreading fear, uncertainty, and doubt if you're new to this space. So a very coordinated marketing attack combined with sell walls. Who did this? Is this Dash Money getting nervous? Is it from PIVX trying to add inventory cheap before they add it to their own exchange? Likely some combination of both, along with some profit-taking and some unsophisticated investors panicking. One thing that's for sure, investing in cryptocurrency is definitely not for the faint of heart, fellas. Now, if you're looking at PIVX as a trade, wait until it gets listed on PIVX and sell that pop. I'm going to be holding because I believe that it's a Dash layer, and I love its masternode distribution, the community, the proof-of-stake seesaw algorithm, and much more. Now, further, the planned zero-coin protocol implementation for this year should help establish PIVX among the top altcoins. I mean, security and fungibility? Who doesn't love mushrooms? Alright, let's get to the news. Alright, first of all, what is up with this article's picture? I guess we can presume that's Cameron and Tyler Winklevoss trying to climb metaphoric regulatory hurdles or something, but honestly, it doesn't even look like them. Moving on, the BATS exchange, the preeminent ETF exchange, is challenging the SEC's ruling on the Winklevoss Bitcoin ETF. Now, I'm sure you all remember the big price run-up in Bitcoin leading into the ETF, as it would have removed a lot of barriers for entry for investors and provided a much safer exposure alternative for interested people who are worried about storage vulnerabilities and more, along with a lot more institutional investment, retirement accounts and everything else, having exposure to what financial people would term a perfectly uncorrelated asset class that provides something called alpha to portfolios. Beta is how they relate in correspondence to the benchmark, but I'm getting off topic. So if you read the SEC's decision, they basically said that the Bitcoin ETF was rejected because you can't trade on regulated markets because you don't already trade on regulated markets, which is mind-bogglingly stupid and produces this chicken-egg self-defeating prophecy that never had a chance to begin with. Now, can you imagine spending 4 years paying lawyers and compliance departments and keeping up with filings and trying to accommodate regulators, all the while the SEC delays and delays their decision until the absolute maximum duration just to say, LOL, this never had a chance. Now, this is crony capitalism at its finest and a sterling example of what this movement is trying to get away from. The SEC is a legacy system that has been obsoleted by the blockchain, fighting for self-preservation. I'd like to see Bat's appeal win, but betting against corruption is a sucker's bet. And while we're talking about a Bitcoin ETF, it's also worth noting that SolidX ETF decision is pending March 30th. And while the denial of the Winklevoss ETF, coupled with the recent hard fork volatility, means it probably has no chance, who really knows? Maybe the SEC denied to manipulate the market, buy some up cheaper, and pump it through SolidX. Now, SolidX offers insurance against potentially stolen coins, while the Winklevoss twins one did not. So that could be how they rationalize essentially stealing $5 billion worth of market cap in 2 weeks if they approve the SolidX ETF. Now, go read this article because this project is amazing. The rise of ad-blocking software is presenting unique challenges to advertisers, and the Brave browser has found a streamlined solution for both advertisers and consumers. For using the Brave browser, advertisers will pay users for not running ad blocks. Everyone wins. And I mean everyone. Brave and BAT tokens aside, can you think of a better way to mainstream cryptocurrency use? People who have no exposure to crypto will suddenly have some and therefore be incentivized to spend it. And us early adopters aren't even the ones who have to pay them to do it. Instead, we get big ad firms to do it for us. And not only are we getting the money exposed and spread this way, but we get big ad firm money into the market to cause this to begin with. Now, I love everything about this, from its immediate impact and viability as an ICO, to an example of why in a year we might refer to Ethereum as the blockchain and Bitcoin as an alt, or maybe I should say Bitcoins if this hard fork nonsense continues. And as exciting as this concept and token is on its own, one of the most interesting aspects of this article has very little to do with the Brave project. Check this out. Toward the back end of the article, Brave project founder Brendan Eich says, Bitcoin is under some serious stress, and Ethereum is a wild ride. We don't want to pick a winner here. So they're looking into ZCash's XCAT, a feature coming soon in the near future and being designed to let multiple blockchains interact through cross-chain atomic transactions. That is amazing. ZCash is really under the radar right now, establishing itself as a major player. Snap this up while you can. And that's it for today's show, guys. I know, I'll miss you too. Thank you for joining me and listening to my rants. Like, subscribe, and tip whatever coin you want me to feature in the description below.